right after RBL Bank has come out and said that they're going to enter into a transaction with Emirates NBD. Here, Emirates NBD, the Dubai-based lender, is going to buy 60% equity stake in RBL Bank, and the price works out to about 26,853 odd crore. This adds up to about 3 billion. This is, of course, an NDTV Profit news break, which was reported on Monday, and now it stands confirmed. This transaction is going to be in the form of a preferential issue, and once the preferential issue is over, you will see an open offer being rolled out for the existing investors. So, all in all, RBL Bank will find now a foreign buyer. As part of this transaction, of course, they have to get multiple approvals, including the government of India, because this is a large FDI transaction that's coming into India. You've got to take the Reserve Bank of India's approval, because RBI does not allow foreign buyers to come and buy this massive stake in Indian banks. Yet, you will also need the CCI's approval, because the Competition Commission will be the one that will be reviewing the state of competition because of this large investment that is coming into RBL Bank. According to the details that have been given in the exchange notification, the preferential issue is going to happen at a price of 280 rupees per share. I have with me Avinash Gorashkar, founder and head of research at Avinash Mentor Research Services. Avinash, welcome to this conversation. I wanted to quickly take your view about this large transaction that's coming in, 26,853 crore for 60% stake in a bank like RBL Bank. What are your first takeaways?
No, I think, Vishy, this was expected, but I think this is definitely going to be a very big sentimental booster for the bank. It would improve its capital adequacy, and at the same time, I know the markets are quite positive that once the new management comes in, you're going to see a new strategy, a new management team taking over. And I think all said and done, I think this could provide the kind of impetus for the bank, because it was grappling with some bad loans, from the credit card loan book. And I think the first quarter numbers were not all that great. But I think this news is definitely sentimentally positive. I think you could expect a good bump up on Monday.
Got that, Avinash. I also have Aditya Shah, founder of Hercules Advisors, on the phone line. Aditya, welcome. Large transaction in a fairly small bank, but 26,853 crore for a 60% stake in RBL Bank. Preferential issue followed by an open offer. That is a requirement, of course. But what do you make of this? Because this would be the largest foreign investment in any domestic bank as such.
Ever since the last 2-3 years, as an unsecured fiasco opened up in RBL Bank, and the credit card and the microfinance space blew up spectacularly, and there was a change in management from Vishwavir Ahuja to RBI. RBI inducting its own candidate for MD and CEO. RBL Bank has been struggling with a lot of NPA issues. What this really does is this enforces a major shareholder into RBL Bank, and I feel that then RBL Bank will have some strategic direction as to how they want to move forward. So this is positive for RBL Bank in the longer term perspective, and I think getting approvals will not be a problem. I think RBI also wants stability at RBL Bank, just as it has allowed Yes Bank also to go into foreign ownership. I think it will also allow properly RBL Bank to go into foreign ownership and get stability at RBL.
Avinash, I just wanted to get a sense from you, a foreign investor who's coming into this transaction. Avinash, I hope you can hear me. A foreign investor is coming into a domestic Indian bank and they're going to put up a large sum of money, right? So it is positive for the bank itself. But from a broader sectoral point of view, there has been this hesitance in India to allow foreign players to come and own large banks, except maybe in distress situations like what happened in Lakshmi Vilas Bank, or what happened even in the case of CSB Bank, Catholic Syrian Bank. I think Avinash can't hear us, so I'll pose this question to you. When you're talking about this situation where a large foreign investor is coming into a relatively healthy bank now, I mean, RBL doesn't have any existing massive problems on the balance sheet. What does this mean for the broader ecosystem? Do we expect a major change in the way that we review the banking system and we see the way foreign investment is coming into the banking system?
Absolutely. As I said, after Yes Bank, RBL Bank is also being allowed to have foreign ownership. So from that perspective, RBI is opening up stress banks. So RBI does not have any stress as of now. We had a lot of stress about 1.5-2 years ago when the NPA crisis came in, and it has lost direction and it has been repeatedly trying to raise capital. So capital is coming into the bank, very important. Once capital comes into the bank, there will be a direction, and the bank will start to do, hopefully the bank will start to do really well over the next 3 to 5 years. So from my perspective, positive, RBI is opening up the banking sector for foreign ownership, but this ownership has to take RBL Bank into the right direction in terms of having a mix of secured and unsecured books. And I hope RBL Bank does go on a path where sustainable growth with proper NPA management is also there. So from my perspective, positive.
I'm just reading the exchange notification that's come out, and it talks about an amendment to the Articles of Association of RBL Bank. It says, subject to approvals of shareholders of the bank and receipt of approvals from the RBI, the board has approved the board nomination rights of the investor. So they obviously, with 60% stake, you would expect an Emirates NBD to come and appoint directors on the board. Does this materially change the way decision-making happens in Indian banks? Because once this foreign investor comes in, obviously they will want something from the entity that they've invested so much money in. Avinash, this question is for you.
Yeah, I think you can please repeat this.
I said that according to the exchange notification that has come in, you are seeing the amendments to the Articles of Association, and of course the investor will get rights to appoint directors on the board of the bank. That is expected because it's a large stake that they're buying. But decision-making, that's a core question, right? Indian banks have a certain decision-making process.
I think some management changes are bound to come in. I think even on the business side, on the unsecured book side, I think, what kind of strategy the new management takes is going to be very crucial, because that area where I think the bank is suffered. So I think a lot of news flow could happen once the open offer is complete. So we have to wait and watch.
I want to take a quick minute to talk about the valuation of this entire transaction. Are we to expect a large dilution, or is it? I mean, I'm assuming this is happening at a premium, but of course they'll have to increase the share capital quite strongly to incorporate the 60% stake. How do you see it? Aditya, if you can hear me. Okay, I think we've lost Aditya's line. That's fine. Avinash, if you could hear me, how do you see the valuation of this transaction playing out? 60% stake, you would obviously have to expand the share capital significantly at 280 rupees. Okay, I think our guests are still unable to talk to us, but that's fine. We will discuss this transaction further. Board approval rights is an important, or board appointment rights. This is an important special right that is being introduced into the Articles of Association. Anybody with a 60% stake, of course, will have the right to appoint a director on the board. So that's an important piece of news right there. Apart from that, what we are also learning is about the way that the other amendments to the AOA are happening, the ability to convene a general meeting. So, a whole host of powers are being given to the new investor. At 280 rupees per share, it's still at a discount to where RBL Bank closed on Friday. I was just checking up on the value. It closed about 299 rupees 50 paisa on Friday. So, 280 rupees would still be at a slight discount to that price. But of course, this transaction would have started much before that. Remember that on Monday, when we reported the story, we had said at that point in time that RBL Bank will continue to have a strategic decision-making process. It will continue with the customers that it currently serves. With the inclusion of Emirates NBD, you will have foreign businesses open up, specifically on NRI, on cross-border trade, cross-border transactions. All of these new business models will open up for RBL Bank, which it currently doesn't have. And I think we have Aditya Shah back on the line. Aditya, the question that I was asking you earlier, how do you view the valuation of this deal at 280 rupees per share, but an investment of, what, 27,000 crore roughly?
So I think RBL Bank is very close to its book value. So this is for the existing shareholders, even though it is at a discount to the book value. But from my perspective, it is a negative in the shorter term. However, in the longer term, the bank does get direction as to how they will move forward, and more importantly, it will get some capital infusion. Capital is really very important and scarce for RBL Bank. So from my perspective, negative in the shorter term, however, positive in the long term.
This is just information that we're getting right now on this entire deal. So it's unlikely that Emirates NBD will change the management. In fact, most of the management members can continue on running the bank. According to what sources are telling us at NDTV Profit here, there is going to be some amount of strategic decision making that will be remaining with the RBL Bank management, while Emirates NBD will come in with some amount of inputs on that decision making. Is this to your mind, when you see this with the current management running the show still, happy days, or is still something that we need to watch out for very closely, how they actually manage this?
Is this question for me?
Yes, Aditya, this is for you.
Yeah. So I think in order to maintain continuity, the investor will continue with the current management. But over a longer period of time, there will be a management change and a strategy change as to how the bank is driven. I think that will take about 2 to 3 years for the entire reshaping of RBL Bank to take place. So I think in the near term, the investor will see continuity, while over a longer period of time, there will be some big changes that will happen at RBL.
We've also got Avinash Gurashkar back on the line. Avinash, I wanted to get a sense of the management continuity, right? This is the point that I was discussing with Aditya earlier. From what sources are telling us, the current management will continue. You've got Subramania Kumar, who's a specialist in the public sector space. He came into this bank under special circumstances when Vishwaveer Ahuja stepped down back in 2021. A few months later, in 2022, June, you had Subramania Kumar come in. How long do you think this can continue? Because now that growth runway is clear, so you will now have to have a growth CEO and not a protective CEO, right?
Yeah, definitely. And I think, the continuity will have to be maintained, because I believe Vishy, quite honestly, you will not be able to Vishy, basically the management will obviously like to see the performance under the old management team for some time before things stabilize. So I think it's a good decision. I think, maybe I don't think the entire management will be replaced, quickly. So it will probably, be a wait and watch, how they go forward.
Okay, understood. Let me go back to Aditya for this conversation now. So Aditya, one of the interesting points that I wanted to talk about was also the results. I hope you had a chance to look at the numbers at RBL Bank. This net profit is, of course, reduced sharply. And that is, I'm assuming, because of a lot of provisions that the bank had. No, actually, the provisions are also low, not as bad. But gross NPA situation has improved a lot. That would point to the fact that their issues with respect to the microfinance sector seem to be sort of fading away, as well as the credit card sector, because that was one thing that was also holding down the RBL Bank results. If you were to look at the gross NPA ratio, came down from 2.78% in June to now 2.32%. That's a very sharp decline on the gross NPA front. How are you viewing the numbers as such?
So I've not seen the numbers particularly, but I've seen the reduction in NPAs. But I think that sectoral reduction in NPA, we've seen the microfinance lenders stage some sort of recovery, as well as the credit card lenders stage some sort of recovery. But I don't think these numbers now really matter with respect to a whole new investor coming in. In fact, I think over the period of next 6 to 12 months, there will be a sort of cleanup of RBL Bank, where a lot of kitchen sinking will then happen and a fresh start will then happen. This is what I think. We've seen a similar thing happen with IndusInd Bank also, where some amount of write-off has taken place this quarter.
Yeah.
And I think that RBL Bank will also do that over the next 2 to 3 quarters, so as to start with a clean state.
So, if you were to look at where the net interest income is coming in, that's down 4% at RBL Bank, about 1,551 crore. I'm looking at other income, which is only flat up. You're seeing provisions down about 19%. So obviously that is helping profitability against working against it. YOY, I think it's down about 20%, the net profit number, and 11% down on a quarter-on-quarter basis. So a whole host of things actually working against the profitability of the bank, but in terms of stability, it's pretty good. Now, you're right that on Monday, when the stock opens for trading again, this news of a new buyer coming in and investing a large amount of money into this bank is going to probably take over the entire headlines. But I just want to get a sense as to what, to your mind, is RBL Bank's benefit in this, right? The foreign banker gets an entry into India. They get a franchise that is working in India, has a branch network, has staff already. So that makes sense. But from an RBL Bank point of view, why, say, Emirates NBD and why not a domestic investor?
So RBL Bank has a lot of issues. So first of all, there should be a good investor who is willing to give a good valuation. I think the valuation at which Emirates is coming in is pretty good for RBL, given the book. You should look at the other thing is you should look at the book also. Largely unsecured book has a lot of risk attached to it. So from my perspective, it doesn't matter if it was a foreign investor or it was a domestic investor. What really matters is a huge amount of capital should come into RBL Bank. That's the first point. Second point is there should be a strategy where RBL Bank develops a mix of secured and unsecured books. The biggest problem for RBL Bank was under Vishnu Ahuja was that they went very aggressive on the unsecured side of it, and that blew up, which raised massive challenges for the bank. So a strategy change together with capital infusion is always positive for the bank. And as I said, over a period of time, there will be a big management change where good management people start to come in and drive the company. We've seen that in CSB Bank. We've seen that. We will also see that in Yes Bank, and we've seen that in Industrial Bank as well. And RBL Bank will also see a change where it is more oriented towards shareholders. It is more oriented towards protecting asset quality, and that is the biggest thing in lending.
Got that, Aditya. Thank you so much for joining us on this program and talking to us about all of this at such short notice. Thank you so much for taking us through what your thoughts are about RBL Bank.